nothing but swings. Pay to play and pray for the next green thing. Risk to reward ratio, bitch, I am the risk. Liquidity's the girl in the skirt, I couldn't resist. I'll front run your love like inside a news. Strip your chart bare till there's nothing to lose. If the spread's too tight, I'll slip the knife. Premium paid in the cost of your life. Break trends, break hearts. I'm the last bull left in the dark. Stack gains, stack sins. Play this game just to watch you spend. Burn charts, burn trust. In my world, greed's a must. Break trends, break hearts. Win or lose, I'll still leave my I'm a pump and dump poet with a champagne tongue. Dividend checks signed in blood where I've hung. Sold my soul for a 3% yield. Then hedges did in bed just to see how it feels. Every kiss a limit order, every slap a stop loss. But I'm too lit to care what the spread will cost. Insider tips, insider trend. Bear market bites, but the bull don't bend. If my cash burns out, I'll burn your time. Then I'll chart your body like an alien Buy the high, sell the dreams. Skin in the game till I tear the seams. One more tick, one more bite. Trade all day, then sin all night. Break trends, break hearts. I'm the last bull left in the dark. Stack gains, stack sins. Play this game just to watch you spend. Burn charts, burn trust. In my world, greed's a must. Break trends, break hearts. Win or lose, I'll still leave my
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where we're going to find out how much money we can lose degenerately gambling in the stock market today. Some say that the limit knows no bound, but obviously we are here to test that concept. Folks, it's a beautiful Monday, August the 18th. I hope you had a great weekend. I don't know where in the world you live, but I hope you guys had some great time, some great weather, hang out with friends, family, hung out poolside, had a marg or two, whatever you wanted to get up to. I hope very much you did. And maybe, just maybe, we have enough rest and enough relaxation that we are ready to tack another fun-filled week in the world's largest casino. And that's exactly what it's going to be. We have everything this week. We have major macroeconomic announcements. We have monetary policy updates with the Jackson Hole Symposium, bunch of Fed talkers going at it. We have some earnings of some of the bigger companies such as Target and Walmart. We have global drama related to Putin and Zelensky and the U.S. and EU leaders. We have a lot going down. A lot. So I hope, like I said, you got all that rest. According to my Whoop watch, which now I've had for a couple days, I've been getting no rest. I don't know how many of you out there use a Whoop, but I'm starting to get concerned that my biology, my physical health is not good, because now I have the quantifiable metrics telling me that, in fact, my health is not that good. So a little bit of a pivot there that I didn't necessarily want, but I guess it is where we are. I went on a date with a WNBA player. You know what? I had an entire morning show planned, but now all of a sudden I want to know about how that went. I mean, I could sit here and do a full economy, market, options, news breakdown for everyone to get not only ready for the day, but obviously for the week. But now I'm just interested in this, honestly. Did did it go well? Is she on a good team? Is she on a bad team? Does she have thoughts on Caitlin Clark? Does she have thoughts on Angel Reese? At this point, you can't start off like comments like that and expect me to not get, I guess, distracted, for lack of a better word here. Now I just need to know how this date with the WNBA star went. So yeah, give us the tea. And what was his name? Oh, that's a funny one. Well, don't let the cat hold your tongue there. Please feel free to share. So as you're doing that, maybe I should do a little bit of my job here. Stock futures tick lower following back-to-back winning weeks. So here's a little looky-see at the market right now. Friday, OPEX, we had a bit of a recovery after sell-off into the afternoon, and then it didn't look good at all, and we sold into close. So OPEX was not a winning day for the bulls at all. And if anything, because remember, not every week of the month is built the same. Some of them are OPEX weeks. And that's exactly what we had last week. And as you could tell, a lot of people apparently with their positions either decided to go short, which I'm doubtful of. Probably more so people were just locking in profits, because don't forget, we did hit an all-time high. Like, we've just been chilling at the all-time high. SPX, you could argue, maybe has a little bit more room to go to fill out this channel. But you know what doesn't? NDX. The NASDAQ has perfectly been chilling at the top of this channel, kind of exceeded it on Wednesday when it clocked its new all-time high last week, and ever since then, lower highs and lower lows. So we're in a little bit of a breather period, and not only can you clearly see that with just the price action and the larger daily and weekly chart structure, but I'm going to show this to you, of course, but you could also see it in the world of options. There's a big pivot. I mean, for so many days, we've been looking at opportunity with like, okay, we have supportive positive gamma below us with all this purple and blue. And then above us, there was like some long calls. And today it's actually switched up a little bit. I mean, look at what's been happening overnight. This might not mean the most sense to you, but what this means here means from really market close until right now from Friday, the net situation in the options market, oh shoot, you guys can't see this right here, is selling calls as in neutral to bearish puts and then buying puts. That's straight up bearish. We have not really seen this set up in a while, and it just seems to be potentially leftover reverberations of really OPEX. So what I want to clarify, especially for you guys joining in so early today, I appreciate when you guys are here on time. Thank you. This is a pivotal week as we're coming out of OPEX. And the last time we saw this type of a setup, granted it wasn't OPEX, was actually this craziness here to really wrap up the month of July, where we hit a high, we sold off, we gapped down, and everyone's like kind of awkwardly there of like, yo, is this the time to get in, to get out? What should we be doing? What should we not be doing? And then guess what? We ended up bouncing, and it was like a nice bounce back, actually kind of perfectly systematic to the upside. But my point being is, we have shifted in terms of price structure, momentum, and options flow. We've shifted from clearly bullish to now leaning neutral. Just because you go from bullish to neutral doesn't mean you're going to go to bearish. And the last example of that was at the end of July. We shifted from clearly bullish to neutral, and then guess what? We went from neutral to bullish. So I'm here to just tell you that there's been a clear shift of like, okay, we're not as like dominantly bullish across all the data that we care about as we were, especially just for how much gamma got burned off on Friday. But just because we're now leaning neutral doesn't necessarily mean we have to go bearish. I would argue that today especially, but probably this whole week or maybe the first half of the week, is more of like, hey man, sit on your hands, wait to see how things develop, and make sure you're waiting for those perfect opportunities to strike. So I just want to clarify once again, and I know I said a lot, but I think it's very important, especially if we have new viewers, that the way every day of the trading week is not built the same. The same thing could be said about every trading week of the month. They are not built the same. Different things go on at different points in the cycle, and we just happen to be at one point in the cycle, especially when you pair that up with some of the news that I'm about to go over of like, hang on, you might want to just take a beat for the first day, 2 or 3 of this week, because as you're about to see, we have some major announcements at the end of this week, also some earnings, and it takes a little bit of time just to process this data that's going to be coming in. So anyway, we are a little bit red right now. but not horrifically red. The SPY's pretty much at break even. The Qs are a little bit farther away. Bitcoin obviously did take a hit over the weekend, but it's chilling at 115. So we'll be getting into all of that. But first, let's really get going with the global drama that kind of started on Friday. Well, it started months and months ago, but the newest chapter of it started on Friday, and it will be continuing into this week. Zelensky heads back to Washington under pressure from Putin. So we've been talking about it for a couple days now, a full week now. Of on Friday of last week, President Trump and President Putin met in Alaska, and the fact that horrendously bad news doesn't come out of it means that it was kind of good. And right now it seems it's like, okay, Europe's just like, we're going to have a meeting with Trump and Zelensky's going to be invited there, and basically all the sides, I believe they're referring to it as trilateral, they're trying to come to an agreement. European leaders joined the Ukrainian president to visit to the Oval Office, seeking a path to end the war with Russia. Trump puts onus on Zelensky to end conflict with Russia ahead of meeting. Obviously, the statement I'm about to give is not like the end all be all, but it seems like one of the major sticking points is who gets what land. Of course, there are other things going on. This isn't exclusively a land dispute. I fully respect that. I get that there's other things going on, but it seems as if the major thing being reported from mainstream media is the sticking point is who gets what land. Of course, Russia wants certain land that Ukraine doesn't want to give up. Anyway, we're at the point where Trump is basically saying, hey guys, like, I don't care who's the first one to bend the knee, but someone's got to bend the knee here, and you just got to end this. And hang on, let me follow up on this one. 3 things Europe wants as leaders prepare to meet with Trump. So I want to clarify, this isn't just Zelensky coming to the Oval Office in Washington. It's also various European leaders. And apparently our main objectives are security guarantees, stop the killing, and go for a trilateral meeting. So this is a thing that, once again, if good news comes out of it, it's a binary event. If good news comes out of it, that could be good as it eases global tensions. But obviously, if someone just pops off and has a bad attitude, it could take a pretty negative turn. And last but not least, I actually thought Bloomberg had a pretty extensive seemingly non-biased breakdown of just the news on this particular event. U.S. allies set to plead with Trump to stand behind Ukraine. So let's see what they really have to say.
Focus then from the U.S., certainly Witkoff, as we heard.
Hang on, let me get the... Why can I not? Hello? All right, there we go. I just want to turn the volume up for you. It doesn't let me do it unless I'm playing it.
On
really?
This potential security guarantee, possibly from the US and its European allies, in terms of a win coming through with the conversations between the Presidents Trump and Putin. At least that's how it's being framed by Witkoff. We know, though, that Russia is going to be seeking those territorial concessions. What do you think really stands out? What are the key takeaways as we lead up to this crucial meeting later today in Washington?
Yeah, Tom, I mean, there's a lot to unpack from that meeting on Friday, but there's also even more we don't still know about it. What I think is interesting is, of course, the symbolism for everybody here in Brussels where you...
Oh, literally just right now, coming across the line. Hang on, what was that report? I think someone is, like, literally starting to meet as it relates to this, like, right now. Trump on today's meetings. Let's see what the result will be. Zelensky is meeting with the U.S. Special Envoy to Ukraine, Kellogg, in Washington. So this is seemingly the process is starting, like, now.
You still have a Ukrainian flag flying behind me because Zelensky was here yesterday meeting with Ursula von der Leyen. Was the red carpet for President Putin on American soil, sharing a podium with Donald Trump. That obviously, from the sort of headline perspective, is the thing that has caught most of the concern for the European allies here. I think, though, the most significant thing that we've learned over the last 48 hours since that meeting is exactly what Witkoff was talking about in that interview that he did over the weekend, which was basically saying, for the first time very explicitly, that the United States is willing to give some of those security guarantees to Ukraine in the event of a peace deal going forward. What do those security guarantees actually look like? That is still an open question. But what he is intimating effectively is Article 5 kinds of protections for Ukraine under NATO without them joining NATO. So this is effectively a sort of NATO-light arrangement in the event of a further attack by the Russians into Ukraine, that the United States would come to the support of Ukraine. Now, if that is in fact the case, 2 things to make there. The first point is that that is a very significant significant step forward. That is something the United States has refused to explicitly say going forward. But the real question is, Tom, why does that require Russian consent? That is sort of backstop of Article 5 to NATO is something that is unilaterally imposed by NATO allies for their own allies. That is not something that requires Russian consent. It is, of course, helpful for the Russians to say, we understand this, and we're going to put this into sort of Russian legislation enshrinement, which, of course, what that's actually worth is another question. But for the United States, that is something that they could have willingly, up until this point, said that they're willing to give Ukraine without those discussions with Putin. So that side of it is a little bit unclear, though it is a significant development.
Right, the idea that you need sign-off from Moscow for those security guarantees that you can effectively put in place should you be sitting in, of course, Washington and inside the White House. Ollie, when it...
I'm going to pause it there. The rest of it I didn't think is the most impactful. But yeah, this is a very good breakdown of like, okay, the pieces you have to watch. And what was it, a couple months ago when this all first started, of how everyone seemingly on Twitter became like a NATO expert, more specifically an expert related to the articles of when other people are compelled to assist. And like, we all forgot about it, but it seems like we're getting back into that world where I wouldn't be surprised if the internet once again collectively becomes an expert in NATO again. So be on the watch out for this. This is with respect to today, and maybe this week. This could be very, very important news. So I just want to put that out there as it relates to the overall global drama. But remember, we have our own monetary policy, economic drama here. Powell has a reason to hedge Jackson Hole signal as data zigzags. So let me give you kind of the backdrop on this one. Last week on Tuesday, we got the CPI report, the Consumer Price Index. It came in lower than expected, cooler than expected. That's a good thing. Market ripped. 2 days later, we had the Producer Price Index, the PPI. So the first one, the CPI, is inflation for consumers. Obviously, the PPI is inflation for producers. That one came in higher than expected by quite a bit, hotter than expected. Not so good. And this is actually suggesting that for the first time, we are getting the actual data measures of the impact of this trade war, the tariff war, whatever you want to call it, the trade deals that are going on. This is the first round of data, especially on the producer side, that all of a sudden, because remember, when they were first announcing this, like heading into April, all these producers bought all the materials they could. Like they just kept buying and buying and buying in anticipation that there'd be some funkiness with price in the future. Well, those materials, they've kind of run out of them, the ones that they front loaded on. And now we're at the point where, okay, they're buying them at the increased prices. And that's exactly why this is the first measure where we've had the PPI way higher than expected. With that, the fact that the PPI is higher and the CPI isn't means that producers have yet to pass those costs on to consumers. Maybe they keep taking that hit to their margin. Maybe they decide to pass it on. Obviously, time will tell with that. But that's the zigzag that this headline's referring to. Is we had a really good CPI report, a really bad PPI report. And with that, we've even been seeing it in real time of how much it's changing the odds of these rate cuts. So at one point last week, there was like a 95% chance of at least a 25 bips rate cut, but the other 5% chance was maybe even a 50 bips rate cut, especially because of the quote unquote models that the Treasury Secretary Bessent was highlighting. He's like, no, I'm not telling him to do 50 bips, but like, hey, I'm just throwing this number out there. So coming into Tuesday and really Wednesday after we had those CPI report, the odds were looking really good. Like we knew we were getting 25 bips, maybe it was even going to be 50. And then if you fast forward to December, there were even a small chance, like a 3% chance of 100 bips by the end of this year. Then fast forward to the market's reaction after the Thursday hot PPI report, and you can see that we've actually shifted now back to there being a potential 17% chance. Can you see this? Yeah, 17% chance that we actually might now not get a rate cut at the September meeting. Now, I do want to clarify, it's a month away, as in we're going to have a whole nother set of data before this decision is made. So these odds right now is the market's current perception of what's going to be happening. And of course, I just throwing this out there that even this week alone, we have a lot of things that are going to change it, no less what's going to happen in the next month. But it is interesting to see how much the bets on the Treasury market and as it relates to yields are just ping-ponging back and forth right now. And that's, like I said, exactly why we have this zigzag effect. And I do want to remind you that Chair Powell will be speaking this Friday, August the 22nd, at the Jackson Hole Symposium, as he does every year. It's going to be a quick 10-minute thing. Last year, there was really nothing to it. The year before, it was massively impactful when we started selling off for weeks and weeks and weeks after that. So this thing could definitely pack the power of having a huge influence on the market. Once again, that is this Friday, August the 22nd at 10 a.m. ET. But before then, obviously, we're going to get some PMI numbers. We're going to get some manufacturing numbers, and we get the FOMC meeting minutes at 2 p.m. Wednesday of this week. So we have some things scheduled. It's in terms of the scheduled data reports. It's not like we have an unemployment or another CPI, but obviously not just us here as degenerate traders, but of all of Wall Street and really the global economy is going to be paying attention to what Powell has to say this Friday. But fear not, there are actually other Fed speakers as well. So starting tomorrow, we have one on Tuesday, two on Wednesday, one on Thursday, one on Friday. So pretty much every single day of this week, we have a Fed speaker popping off saying something. So another thing, obviously, to pay attention to. And then let me come back to this. Powell has reason to hedge Jackson Hole signal as data zigzags. He's going to come on, if I have to guess, on Friday, very, very political. And when I say that, I don't mean like for or against Republicans, for or against Democrats. I mean political in the sense that he's going to do a lot of talking without really saying anything. Almost kind of that classic lawyer talk where you said a lot of words, but by the time you break it down, it really doesn't mean anything. If I had to guess, it's going to be more of, hey, we're just going to react to incoming data. We're obviously going to stick to our dual mandates of low unemployment and price stability. Remember, and I see this a lot, but remember, there is no such mandate for the Fed as it relates to the stock market. It has nothing to do with, hey, keep the stock market higher or keep it lower, keep it sideways. Nothing with the Fed has to do with the mandate with respect to with the stock market with respect to their mandates. They have a dual mandate of low unemployment, which we do have low unemployment. It's in the 4%, which is historically very, very low. And then price stability. That's exclusively their dual mandates. Nothing to do with the stock market. I think that's a very important thing to remember and understand. But anyway, last thing on this particular note.
So it's Jackson Hole, and it's wonderful that we're all going to be there. It's a different Jackson Hole. A couple of weeks ago, Joe Weisenthal was like, yeah, another Jackson Hole. But this, like 07, 08, 09, maybe one since then, this is going to be interesting.
The rumor is that there's so much interest in this year's Jackson Hole, presumably because of the attacks on the Fed, that there's so much media coming that there isn't enough room in the lodge.
I told you that. I have to say
No,
that.
you didn't
told
tell
you
me
that.
that.
To Joe's credit, the reason
we heard it from our producers.
Right. The reason we were talking about that, I made the point earlier. The reason we were talking about that is because Joe has very kindly, very gentlemanly given up a room at the lodge because we don't have enough for the entire team.
So where are you staying?
He's staying
some
30
other
minutes
lodge 30
away.
minutes away.
So
I'm not complaining. I'm
That
going to
is
Jackson.
legitimately
I'm
very
going to
nice.
Jackson Hole.
My gut feeling is this is a very nice lodge with places to work
It's
out.
fine.
Huge
It's
pool.
fine. I'm not complaining.
100%.
One year, you were
They're
in a
just like
pup tent.
blowing out
I remember
my
this.
face
You were
right
on
here.
the lawn.
No, it's not
They
true.
just
It's
are
not
releasing
true.
their volume.
CNBC,
No, it's just that I have-
Bloomberg, and Lisa's pup tent.
All right, cut it out. Honestly, I think it'll be really interesting.
Yeah.
I think this year is going to be fascinating
Holy
to see
shit.
how Jay Powell messages this
Can
going forward.
Can I bring up a theory that I have? Wouldn't this be an elegant place with all the heritage of the Fed that he announces that he's stepping aside or resigning here?
Really?
Why?
This seems like a long shot.
If you were anyone on the Fed, or if you were Jerome Powell, and you truly
Question to all of you. How many of you think Jerome Powell should announce his resignation, his stepping down this week? I'm not asking you for the odds of it, of do you think it's likely or not. I'm asking you, do you think that he should? Like you and your personal opinion of monetary policy, the interplay with politics, the current state of the economy, and based on his body of work, how many of you believe he should announce his resignation? Not talking about the odds of it. Do you think he should or do you think he shouldn't? No, fat chance. Once again, I'm not asking for the odds. I'm asking you if you think he should. No, hell no, nope, no, Powell needs to go. No, nopers, no, 8 minutes, no, absolutely no. Straight to jail. Why would he go to jail? He should, but he won't. He should, but he won't. Interesting. The Rumble chat is very much more on the side of he should step down, while the YouTube chat is very much more on the side of no, he should not. Interesting. So anyway, get ready for that. That is Friday, 10 a.m., Jackson Hole Symposium. He'll be doing about, I don't know, last year's like a 10-minute, 12-minute chat. But starting tomorrow, every single day of this week, we have other Fed members talking anyway. So it's going to be a heavy monetary policy Fed member type of a week as it relates to the overall market. But don't forget, we're still in earnings season. We have pretty much 2 weeks left. There's a couple ones this week after the market closes today. Palo Alto Networks, that is a Nancy Pelosi play. Tomorrow morning, Home Depot. I like to pay attention to that just to see what's going on. It's a good barometer in my humble opinion. Wednesday, we have Target, TJ Maxx. Wednesday, we have Walmart. That's going to be a big one. Target and Walmart gives you a really good idea of what's going on with retail. Also on Thursday, we have Zoom and Workday. I don't know if any of you are really trading that. So obviously things are slowing down. And then next week, the only one that you're probably going to care about is NVIDIA. So things are very, very much slowing down, but still technically 2 more weeks left of earnings season. If I had to argue, I'd say you guys probably care about Home Depot, Walmart, and NVIDIA next week are probably the final 3 where it's worthwhile to pay attention to what in the world is going on. And just because we're at the start of a new week, I do want to remind you about seasonality. And August from a seasonal perspective is really just not bullish or bearish. Some years it's bullish, some years it's bearish, some years it's neutral. But the seasonality of this particular month is not really that exciting of a one. And then I'm even here to report that for this upcoming week. You can see this little blue here, as in over the past 5 years, this week has been slightly bullish. But if you look at the past 3 years, this week has actually been slightly bearish. So this is very, very, very much so a just kind of choppy whatever. As in with seasonality, you might care about some of the individual days that I give out every single Sunday. This is 100% free. This newsletter, I whip it up. I give it to you in the morning on Sunday. I give you a little breakdown of the previous week, a little cheat sheet for the earnings, a little cheat sheet for the major macroeconomic events, and then probably most useful is the seasonality of each individual day. So even though the bulls win this day more often, you can see that sometimes when the bears win, it's quite large, which is why the bias of this individual day is a little bit more neutral. If you look at tomorrow, Tuesday, it's a bit more bearish. Wednesday, it's a bit more bearish, but not as bearish as Tuesday. Thursday is clearly neutral. And then Friday is also a little bit neutral, maybe leaning bullish. So overall, we're not seeing those nice patches of bullish, 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 or bearish, 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 where we can like kind of lean into that seasonality. This is a little whipsaw back and forth. The odds are not that impressive. So I just show it to you because I'm always showing it to you, but I want to remind you that this is probably one of the least impactful, the least impressive portions of the year as it relates to seasonality, but I want to let you guys know about that regardless. Now, what's going to probably be more influential today is, first of all, I want to let you guys know that on Friday, the big guys did absolutely nothing. This light blue line right above my head, this is kind of just the impact of larger players. And you can see on Friday, they basically took an early weekend because it barely moved. And then as the options market updated, we can see we are now completely dominated by positive gamma. We are most likely going to have very sticky, very boring, very choppy price action as of right now between 6,600 all the way down to 6,300. Now, if we break one of those extremes, that's where it becomes measurably more of negative gamma and we can really get moving. But the chance of us going up or down 150 points today is pretty much slim to fuck all. Right now, the options market is pricing in a 20-point move, a 0.3% move. And for us to get anywhere close to negative gamma today, we would need to move 150 points. So it's just not likely today. I'm not going to be the person and tell you it's impossible, but I'm just telling you that's a lot of positive gamma. So probably going to be sticky price action. If we go up, market makers are going to sell. If we go down, market makers are going to buy. Also pairing that up with the fact that we have these guys doing nothing on Friday. The overall daily chart, we could easily go for a breather to fill out the bottom side of this channel. There's still a little bit more upside, so that's even a 50-50 bet. So you kind of get my point that right now, instead of being in like Fast and Furious 10, like we're just NOS forward, bullish, all gas, no brakes. We're very much now in neutral. I would by no means argue we're in a bearish state by any means, but I would say we are neutral leaning bullish, which is a step back from where we were heading into OPEX last week. So I cannot stress this enough. I think today and really the first half of this week is going to be more of the phase of like, let's just chill. Let's see how things look. Let's just wait to see what the new trend's going to be, because the current trend is clearly not that evident. But with that being said, I know that there's some degenerate day traders in here and scalp traders anyway. So as I always do, I mark out the previous trading sessions high, low, and close. That is the green, the red, and the white. And now I've decided to add in the high and the low of the session from 2 sessions ago. That's the dash green and the dash red, because right now you can just basically see we have this clear support, we have this clear resistance. You might just want to wait for that range breakout. The transition zone, at least with respect to the gamma and the delta on the 0 DTE for SPX, is right here between 6435 and 6440. Oddly enough, if you break that, that is literally the bottom of this overall range, and then that sets up a potential move all the way down here to 6,400. So that's more of the bear case, but obviously if the bulls start to dominate early the day and we see that delta start to pop off, I'd be watching 6465 and maybe somewhere in between 75 and 80 up to the top of the range. So we're still clearly, like, this is so evident. We just have the same tops, we have the same bottoms. We are stuck in this range that's been created basically ever since Wednesday, and we just have to be calm, cool, and collected to see what in the world happens. So feel free to screenshot this, feel free to write these levels down. I could always come back to it if there's any questions, but basically I'm just getting all these key open interest levels from really spot gamma right here. I should also let you know that I have these accounts. You guys saw that I had a very, very bad day on Friday with the newest version of my portfolio systems. So I did what any person would do, and after I blew them out, I bought a whole new stack of accounts and I started degenerately manually trading, and that's exactly why each account is up 4K, because I was pissed off and I was just slinging 10 contracts at a time, this way, that way, the other way, and it just worked out that on Friday, even though they were brand new accounts, I made about 4.4K on each of these. I have 5 take profits and I have 20 Apex, which means I'm about halfway to the goal you need to pass the test at 9,000. But with that being said, I want to kind of point out, oh, you guys can't see it the best. Maybe I move myself over here, that I really consolidated my systems over here. There's a lot less than normal, and that was very, very intentional of why I did that. So ideally, things are a little bit more based, if you will. But anyway, here we go. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. So like I said, trading on new accounts, there was a succession of, there was a real bad beat
Order
Friday
submitted.
morning.
Order filled.
What? How did I lose money? That it went long at 92.50 and sold at 97. How? It's because of the trade copier. So look at this. So I'm using 2 different lead accounts. I'm using 716 and 892 as my lead accounts. Those both locked in 320 and 350. While all the follow accounts, there was so much lag behind them that they actually lost $72. And that's only the difference between the copier and the code. So actually the code is faster. Interesting. Yeah, because right here. So even though it's just, it fired too quick and that was the slippage, like the 2 lead accounts made their money while all the 19 follower accounts on Apex and then the 4 follower accounts on Take Profit, they executed it too slow and ended up losing money. So that's another example of slippage. And obviously I do want to point out, I think it's mentally healthy that clearly slippage worked against me in that effort. I have my lead account made money, but think about all the times even last week that I ended up doing something like this, and the lead account made the least amount of money while slippage helped the other ones, and I locked in more money. So I like, as much as it's easy to think like, oh, slippage always hurts you, and like I agree with you there, I do think it's mentally healthy to call out the times that it actually benefits you. So what you guys just witnessed is the strategy worked exactly as anticipated. The lead accounts made a good chunk of change. They both made 300, but due to slippage and poor fills, all the follow accounts did not. So that's literally exactly what you're seeing on the screen right now. It's very, as I'm alluding to, it's very, very easy mentally to be like, oh, slippage never helps. It always hurts. It always hurts. Did your lead account make money? Dude, it's literally on the screen. How many times can I say that the lead accounts made money? Trex, come on, man. Pay attention. Yeah, both lead accounts. Here's the take profit lead account. Here's the Apex lead account. They both made money. The follow accounts ended up being about $400 worse off. Slippage in milliseconds of trade delay. Yeah, but also remember, because all of these like Apex and Take Profit, they are obviously sim to funded trading. So the slippage is actually worse because of the process that it has to go through. So there's going to be worse slippage in these environments than in like actual trading. And then also, in terms of slippage, just because we really don't talk about it that much, you're going to have less slippage in more liquid markets. So something like ES is actually far more liquid than something like NQ. Now, I want to clarify, NQ is a very, very liquid market. It is a very liquid market. But with that being said, on a relative measurement, ES is still way more liquid than NQ. So there is a couple things you can do to fight slippage, or in an effort to minimize it. You're always going to be dealing with slippage. But if you want to minimize it, you can trade on quote unquote real accounts, like your own self-funded futures account. And then you could also trade more liquid products and assets such as ES versus NQ. And even that, NQ is still far more liquid than other ones like live cattle or shit like that. So just to kind of break down, I don't know, a couple of things that I've learned throughout my days of battling with this shit. Well, strong opening thus far. The question is it going to hold though? Is it going to hold? Thus far, the new system, which is not named, the one we had last week was the God for Luck. Apparently not that lucky because it got its ass handed to it on day freaking one. Meta is getting clipped right there. I'm very, very happy I cut that position. I was in calls and Meta's getting its teeth kicked in right now. Holy shit. What's up the most? It looks like Nvidia is currently up the most. That's quite the bounce back that we have right now. So it looks like Meta's down the most while Nvidia is currently up the most, at least with respect to like what I have on my watch list. We have Bitcoin taking a hit. It's sub 116 right now. We're getting the upside gap fill, not a true gap as in on the daily chart, but I'm just talking about hitting the previous day's close. Obviously, both the SPY and the Q opened below the previous day's close. The SPY just tagged it 4 minutes into the day, and actually the Qs hit it 1 minute into the day. So both the SPY and the Qs currently kind of battling out at that red degree movement. You could see it over here above my head, the SPY and the Qs of do they want to be green, do they want to be red, literally right at that closing value. Commonly a large reaction area, so let's just wait, kind of be calm and see how this one plays out. If you're just joining in right now, I have made one trade today due to slippage. It lost money, even though on the lead accounts, it did actually make me money. So, hey, there's a lot of time left in the day. Maybe with a little gumption and perseverance, I'll be able to pull it off. But I'm a little bit bummed about this opening because I did set one of my strategies. Even though I told you guys I consolidated it, which I did, I kind of set it to like super degenerate mode. Historically, up until today, when you guys have seen it, it only traded once, maybe twice a day, but for it to trade the second time, it had to be very, very, very sure about the data. So most of the days it fired once, but you guys have seen it like live with me trading 2 times. So over the weekend, in a mental spiral, as I was heading very quickly to a pit of despair, I decided it was appropriate to make a super degenerate mode where there's just no cap on trades. So like as soon as it sees the data setup it needs for trade 1, if it sees that at any other point in the day, it can trade again and again and again and again and again. So that's one of the little switch ups I did, and I'm excited to see if it plays out today. I'm very excited to see. Right now, the 5 minutes bullish, the 10-minute is bullish right after a recent test, 30 minutes bearish, 4 hours still bullish. So a little mixed up here on the S&P 500. With respect to the NASDAQ, the 5 minute is bullish, the 10-minute is testing, trying to go bullish, 30 minutes bearish, and 4 hours barely hanging on to being bullish right here. In fact, in the pre-market low, that was testing that 50 EMA. So from a momentum perspective, we were very much getting a like kind of confusing picture right now. From an options flow perspective, the Mag 7 was bullish up until 935, recently took a hit. S&P 500 actually kind of pumping and now just going flat. So that is a little bit more bullish. With respect to the big players, thus far they've done nothing today. And then obviously if you're just joining in, I'll zoom in on this gamma chart so you can see that we are in fact chopped by a lot of positive gamma above, below, inside out. No matter how you look at it, that is a lot of positive gamma. So we're at the point where we have to see, is this going to hold or not? And as we are waiting, a very quick shout out to today's stream sponsor. You guys have heard me talk about them before. Make sure you read that disclosure that's right over there. Basically, if you're in the world of trading, there is a risk of you losing money, but the fact that you're watching this show means that you've probably already internalized that fact. It is not necessarily an easy game, but in my humble opinion, Public does make it an easier game, and it is by far my favorite place to trade options because it's the only brokerage that I know of that you get a rebate every single time you trade an option. Doesn't matter if it's a call, doesn't matter if it's a put, doesn't matter if you're buying, doesn't matter if you're selling, doesn't matter if it's a singular leg or a multi-leg strategy. Every single options contract you trade, you earn a rebate. It's phenomenal. There's no commission fees. There's no per contract fees on stocks and ETFs. Obviously, for some of the other ones, you have to read that little whatever stuff down there because technically on the different assets, there's different things going on. So by far, my favorite place to trade options. I think if you guys have watched my show at all, you know that I've been partnered up with them for over like 2 years, and it's for good reason. It's my favorite place to engage. It is pinned to the top of chat. It's in the description of the video. If you use that link, you're going to start off at a higher rebate tier. So it's awesome. I think you guys should just download Public, but if you want to start out at a higher rebate tier, earning more money more rapidly, use that link pinned to the top of chat. Beyond options, yes, they have equity trading, no payment for order flow. They have crypto trading. They have bond trading. They have retirement accounts. They have high yield accounts. They have pretty much everything you need. Can you trade spreads on Public? Yes. And actually, that's a way where you can get even more rebates. So my point is this is free to download. It's free to sign up. It basically, you guys have a freebie to check it out to see if you like it. And then if you want to fund your account, it's a very quick way to start earning those rebates. And then obviously check out all their other offerings. Like I said, it is pretty much no risk to you to see what in the world is going on here if you like the app to begin with. So I highly recommend it. There's a reason why I'm using it every single day. It's by far my favorite brokerage. Pinned to the top of chat in the description of the video. Make sure to use that link to start out at a higher rebate tier. And obviously, shout out to Public for being partnered up with us for so long. Meta is getting its teeth kicked in right now. Nvidia is kicking in someone's teeth. Man, look at that. Nvidia up 1% while Meta's down 3.3. Was there Meta news of like that? Almost seems Meta. I want to know why. Oh, Reality Labs posted a $4.53 billion loss in the second quarter. That's a lot of billions lost. A lot of billions lost. So the market not the most stoked about that. Not the most stoked. Is there any other news on it? A Meta stock falling, stepmom is to blame. Okay, if you say so. So it looks like the reported loss for the Reality Labs subsector, which kind of relates back to a couple of years ago when everyone was talking about the metaverse. That's kind of where they did quite a bit of the metaverse, whatever, development and whatnot. Looks like they're still burning some money. At least that's the first thing that I saw here. Meta, dump it. So that might be it. Meta Reality Labs. All right, it's being posted by, yeah, that's getting goosed. It's getting goosed. Uh-oh, the spy's turning now. Are we not going to hold green here? Uh-oh. Are we chippity chopping around? I thought one of mine should have fired the second strategy. No, it's not because it's too close to just equilibrium. I put in because of how much my ass got handed to me on Friday, which unfortunately a lot of you saw, and it kept me up all weekend just of how publicly embarrassed I was. I added in a couple extra filters, ideally to kind of squash out some of the false firings, and that's what I believe I had on Friday, was some unfortunate beats that were exclusively prompted due to just like bad beats. So in an attempt to avoid these bad beats, that's exactly what I ended up coding into my strategy, was a couple extra like checks here and there before wait, hang on. Where's my... Yeah, it's not gonna... Looking at it right now, because we were pushing up and now we're pulling back, I don't think the code's going to fire for a little bit. I think it needs, well, I know it needs a bit more consistency in one direction or the other. It doesn't care if it's up. It doesn't care if it's down. It just wants multiple bars to be showing some form of momentum. And the fact that we've gone from bullish momentum to bearish momentum means that it's basically netting out to zero. So it's going to take a couple more minutes, a couple more bars at minimum for this to decide to fire again. And if it keeps chopping sideways, it's just not going to. Are you still holding AVGO calls? No, I have not been in those for a while. And I'm very happy I'm not, honestly. But you can easily know what positions I'm in by just being in the Discord. That's kind of the point of the Discord, is I share all my trades, and then more of like chit chats about them, of like what's going right, what's going wrong, how is it looking in the trade, like what did I see, what did I not see, am I on tilt, am I revenge trading, just much more of an in-depth conversation rather than just like in something or not. I mean, I'm never really a fan of people just like arbitrarily copying, because like that's not how you learn. Like whatever, people have good days or bad days, but if you learn a little bit more about the process, you can start to learn of like, okay, like is this a good process or not? That's like way more important. One Direction, I love that band. It's pretty much what the entire strategy is on. It's just on the band One Direction. Is Kramer bullish on Meta again? I wouldn't be surprised. All right, here's a look at the Mag 7 flow. Bullish, bearish, bullish, now nothing. Looking at the S&P 500, bullish to now giving it back. So very quickly, we went from a delta high to a delta low. So the market pretty freaking indecisive right now. I'm actually surprised that it's even... I thought we'd be indecisive on like whatever, the 30-minute, the 4-hour, and the daily chart. I didn't think that we'd be this indecisive all the way down to the 1 minute at market open. So I'm seeing a little bit of a head shoulder on the 1 minute on NASDAQ. If you happen to be a scalp trader there, you might want to be looking for a lower high rejection. But on the flip side, the SPY is catching a bit of a bid. It looks like it's its second distinct test of this red to green. So we're once again seeing that the SPY is on a relative basis outperforming tech. NVIDIA seemed to be the one high-flying tech play, giving the NASDAQ a bit of an opportunity. The rest of it is not looking so bueno at the moment. Not looking so bueno. But the SPY is catching a bid. So here's the question: is the SPY going to be strong enough to drag the tech sector with it? Or is the tech sector weak enough that it's going to drag the SPY down with it? When I see these in-between types of things, it like right away, my mindset is to literally just do nothing. Like 100%, it just means it's okay to do absolutely nothing. Now, is there like a itch that I want to trade? Yeah, I'm pissed off that all of these technically should have been winning trades. You could see right here, my one account went long at 92, sold at 97. Awesome, made a good chunk of money. But due to how quickly the move happened, these other ones actually got in later, got in at 98. There was like a weird, actually, can I even show, let's go to the 1 second. Can I show you? It's just, this is the nature of slippage. And as you get more and more into systematic, mechanical, algorithmic trading, this is the type of shit you're going to have to deal with. But it was apparently like a portion of a second off, and it got a fill past the point where the other ones got their profit locked in. And even, yeah, that's a pain in the ass. So I'm not necessarily in love with any of these trade copiers. I haven't really found one that can just process that quickly, like quickly enough for the type of trading that I do. And it's just frustrating because even if it waited a couple seconds later, that would have been a shitload of money. Instead, because of that little slippage issue, the lead account already locked in. So all the follow accounts were like, oh, we should lock in too. And they locked in a loss because that was the profit target of the lead account. So that's how this came about. And it can simultaneously help you and hurt you. There were many days last week that I streamed to you, hey guys, like it's actually making me more money than I anticipated because the slippage, it went further into my profit target, thus making more money. Here's an example of the times where it actually kind of hurts you. And it's just, in a certain sense, it's not a bad beat because it's not like you blow out or anything. But sometimes right when your trade fires, if there's a big burst of trading, especially because this is a SIM funded environment, you can get a little bit busted up. You can definitely get a little bit busted up. Okay, well, looks like we are seeing a higher low or at equal low on both the SPY and the Qs, depending on if you're looking at the 932 low or the opening low. The SPY is pushing to a fresh high, so regardless whether it's a higher low or an equal low or kind of in between these two, it did make a fresh high. While the Qs, similar situation, it broke the 932 low, but it held the 930 low, so it's either a higher low, a lower low, or somewhere in the middle, depending on really you and your own thoughts of how you read the charts. But regardless, since then, it's pumping up and following a little bit of the SPY. The Mag 7 is catching a bid right here, clearly getting that little bit of a pump. And the SPY actually just got a flow alert. So that's most likely someone locking in a little bit of profits, but we'll find out soon enough. But a little bit of choppy, and then finally a trend starting to establish about 15 minutes into the trading day. So let's keep an eye on this to see if it can keep pumping. It'd be interesting if the Qs can also take out the intraday high the way the SPY did. Then we would have kind of agreement among the two. Bitcoin not doing so well, trading at 115. The daily chart's actually looking pretty beat up on Bitcoin right now. Looks like we have a fake out breakout, and that would be pretty much confirmed if we snap 112,000 this low from Sunday, August the 3rd. If it pushes up, makes a fresh high, and then vomits all the way down and makes a fresh low, higher highs, lower lows, that's the expanding microphone pattern. I find it to be the most difficult setup to trade just because your risk is so incredibly far away and the market's indecisive. But in this case, that's by definition a failed bullish breakout, and a failed bullish breakout by definition, obviously has to be bearish. So I'd be watching that, but ideally it could catch a little bit of support right here at 115, because then we could keep going with this succession of higher highs and higher lows, bounces right off the 50 EMA, recaptures 118.5, and then gives us another shot at 124.5. That'd be a nice setup, but I'm not going to hold my up. The Qs are starting to trade again. Oh, brother, oh, brother, oh, brother, oh, brother. I actually feel... I don't know if I should be happy or not. This is a lot of consolidation. So maybe that is a good thing, because like my brain, I guess it's just like how we're all so addicted to dopamine. I'm sitting here, I'm like, dude, why is my strategy not fired off more? Like it should be trading, it should be trading, it should be trading. And maybe it's good that it's not, because by definition, this is consolidation. So maybe I should be happy about that. I don't necessarily need that anymore. Okay. Yeah, so maybe that's just like the degenerate gambler in me, where I'm like, all right, guys, like let's get trading, when in reality, maybe it's good that it hasn't traded. So it's a weird day for me to pitch to all of you of like, yo, I turned it on to like degen mode and like it could trade a lot. And then this is probably like the least trading that you've seen in weeks from it. So I guess I'm sorry. I guess that's on me, but it should start trading now, because we're seemingly not consolidating anymore. You could argue that the SPY still is, but the Nasdaq has clearly started to break down. So maybe it'll start trading past 10 a.m. It's 9:51 right now. Let's take a look at Bookmap to see what's going on. What side of the screen? All right, let me move myself over to be less confusing. It looks like if you're day trading, scalp trading, something like that, it looks like there's quite a few buyers attempting to step in at 23735. I see a lot of sitting buy orders right there, 23735. So if you're short, that might be a reasonable target. If you're looking for a place to maybe do a dip buy reversal, that might be reasonable. Obviously, do what you want. It's your money. I'm not your mom. I'm just letting you know that there is quite a few sitting buy orders right there at 23735. And what are we seeing? We broke the point of control at 775. We broke VWAP up here just below 2380. So we're below VWAP, we're below the point of control, and we just took out the intraday low. That's not looking so good on the NASDAQ. The 5 minutes bearish, the 10 minutes bearish, the 30 minutes bearish, and actually the 4 hour is even testing to potentially go bearish, which we haven't seen since like fucking NAM. And by NAM, I mean early August. Is the last time that the 4 hour is actually on the bear side of things. This was that last potential fake out where, actually this was the fake out on Friday, August the 1st. Then we pumped and put in the higher low. It didn't get rejected. This right here, this is actually an interesting teaching opportunity. This sell-off on Tuesday the 5th, that was the decisive one of if it came down deep enough, equal lows or lower lows, okay, we're actually going bearish. But here it obviously had a higher low and then it led to this overall push. So just, I don't know, a little bit of a didactic moment, if you will. But what time is it right now? It is 9:53. 9:53. Do I need to manage something again? Oh, okay, we don't need that. We don't need that. We don't need this. I'm a little nervous that things might double fire, which I think I'm right to be nervous about that. I think I'm right to be nervous. Should I? Because that's one of the issues that happened to me, Tuesday of last week, where two separate strategies both decided to trade at the open of a new bar. I'm on a separate set of information. So even though I have logic checks of saying, hey, don't trade if the overall account's already in a position, there are some times where the account's in no position, but two independent strategies actually say, hey, we like this setup. But that's what I'm watching for, and I'm a little bit nervous about it. And by a little bit nervous, I mean I'm a lot a bit nervous. We're going to find out. 9:55. Oh, I wouldn't mind this short. If I were manually trading, I'd short this breakdown here at 54. The low is 54.25. I would short at 54, target at 50. If I had to manually trade right now, if I had to scalp trade, that's what I would do. Yep. Honestly, you might even be able to ride it down to 40 or 35, but I would be in right now. I would get that short at 54, and I'd be targeting 50. So that would have, like I said, if I were manually trading, I would have taken that, and then I would be feverishly watching these levels right here. Good, rejected where you want it to. That's maybe even a point to add in a little bit more, improve your average. But I would very much be focusing on 50, 45, 40, but really 35. This seems to be a massive area. So this will be telling. I have a feeling that the market's going to be attracted to this. That's a lot of buy orders, at 35. Is it guaranteed that we hit it? No, but I would say that it's going to be high odds. So I'd be watching that 35 level, and then I'd be paying close attention to see how we react from there. Are there enough buyers coming in, and that's our new base, and we go, or does it just like completely waterfall through and we don't even like retest it? So what I'd be watching for of like to try to get an idea of this short-term time frame in this sentiment is paying attention to the market right after a test of this extreme amount of sitting buy orders. Oh, brother. Oh, brother. All right, Meta. Well, now the SPY's even starting to look weak. Now even the SPY is starting to look weak. What time is it exactly? Okay, it's 9:57. I got to think about the logic. Is there a chance that both of these strategies could fire at once? I think there is. But when the one strategy doesn't turn on till 10 a.m., I'm very, very worried that I have one strategy that's currently not active and it becomes active at 10 a.m. Basically, it processes the first 30 minutes of data, comes up with a bias, and then looks to fire off that bias and waiting for a certain risk to reward like opportunity. But it uses the first 30 minutes to basically try to predict the remainder of the day. It wants to trade in that bias, but like I said, with a certain risk to reward setup. I'm worried that that strategy turning on in 2 minutes might interfere with a different strategy that turned on at 9:45. How much? Well, we'll see. Oh, it definitely fucking is. It totally is gonna fuck me. All right, let me fix this. Okay. Well, by turning it off, that means that there's going to be no interference. I think we're good. I just wanted to double check some of my data, and I think we're solid. I'd rather be safe than sorry, especially based on how things went for me for Friday. So, I think that this could get a little bit saucy here. And hey, it's a Monday. It's a day where maybe we're transitioning from bullish to bearish. We're definitely pushing neutral at minimum. So I think safety could pay today. Safety might in fact pay. And other than that, it's just money anyway. So now I think the only thing I have left running today is the new and improved degenerate trend following one that historically only runs once. Sometimes it runs twice. But now I updated it over the weekend to say, hey, run as much as you want. Picked up some more rum. Well, I've been in rum for at least a couple of years now, and I'm just invested in it. I don't actively trade rum, and I definitely don't play options on it. That's one of the equity holdings I have in my investment account, which I actually mentally find it's much, much easier, in my humble opinion, to keep those accounts distinct. Just so you don't feel like, I don't know. I think the context switching really helps a lot of like, nope, this is my investment account. I plan on being in it for at minimum multiple years. And it's a fundamental play on the growth of a company. While then I log into my other accounts and I more so feel the like, okay, like I'm actively trading here. I actually sometimes switch it up even more, and I'll have like a certain account for selling premium on options and a different account for like going long on premium. Rum is cheap. It's cheap right now. Well, that's up to you and how you do the breakdown. Remember, the dollar value of a stock doesn't mean something is cheap or not cheap. Cheap would be defined as, really, do you think its market cap is trading at a discount to what you perceive it to be? Cheap, like there are stocks that are trading like below $10 that are actually considered expensive, and then there's stocks trading above it that are considered cheap. The dollar value of the stock price, because remember, that can always be changed based on the amount of shares out there. What matters is the market cap. Like, is the overall market cap currently trading at a premium, or is it currently trading at a discount? You should never be defining cheap or expensive based on just the dollar value, because not all stocks have the same outstanding share count. So remember, market cap is the outstanding share count, how many shares there are in existence, multiplied by the current share price. And that's how you get market cap. But there's no set rule for how many shares companies do or don't have. Rum is cheap at $5. Once again, you shouldn't be basing it. You should be basing that on market cap, because certain companies trading at $5, well, that's a very different thing than when they do like reverse stock splits or someone's exercising warrants. Remember, you can screw with the pool of how many shares are in existence. So just to look at the dollar value, especially over the longer term, like if you compared Nvidia at $100 right now to where it was in 2016, 2017, that's not a fair comparison because it's done stock splits since then. So that's actually one of the issues you're going to find when you're doing historic testing on equity data. And it's just sometimes you have like non-clean data if you're not properly accounting for that. And that actually can really mess up, especially if you have some swing or like investment strategy stuff, to make sure you're properly accounting for stock splits and those types of, not really manipulations, but those types of alterations to the outstanding share count. All right. Well, both the SPY and the Qs almost hit their low value from Friday, like almost did it, a couple cents away, and then said, "Nuh-uh, honey. Nuh-uh, honey." I think now that we've traded enough, it's 10:03. That's a whole new one. I might be able to turn this one back on now. How are we looking over here? 5 minute. Dude, this shit's just not firing at all because we're just not trending. There's no trend whatsoever right now. This is painful. A little bit up, a little bit down, a little bit up. As much as I like fully admit that this is boring as fuck, I am secretly deep on the inside grinning because that means that my robots are stopping me from trading in a choppy bullshit situation. So as much as I'm like, yo, I wish I went long and then short and then long. Well, that's hindsight. Like hindsight's 2020. That's Monday morning quarterbacking. When in reality, if you look at the 5 minute chart, if you look at the 10-minute chart, if you look at the 30-minute chart, you would say this is nothing but a chop fest. And has there really been a good enough indication that you should be trading in any direction? And then the fact that my bots haven't traded, it kind of makes me happy that I'm at least attempting to be on the right side of shit. I'm attempting to, but we'll find out. Do I want to turn that back on? I'm tempted to turn on the one strategy that I turned off when I just thought that there would be a conflict, but now I'm not necessarily so sure that there's going to be a conflict. How's the options flow? So the Mag 7 is all over it. This is just another piece of evidence we have that the market has no fucking clue what it wants to do today. So as we were kind of like starting to get that sneaky suspicion on Friday of like, yo, is this like a clear pivot point? We're maybe like even this, like it's not necessarily a pivot point. I guess that's a little extreme for me to say, but this is very, very indecisive. We're kind of up, we're kind of down, then we're more up, then we're more down, and then all of a sudden we're back. The SPY has what's referred to as an expanding pattern, higher highs and lower lows, while the NASDAQ is lower highs and lower lows. So this is definitely more of a bearish trend in the tech sector, while the overall market is, in my humble opinion, the worst strategy to change. When you see fresh highs and fresh lows, I think that's a uniquely difficult setup to trade, just because how do you define the trend? How do you define the trend? Oh, what else is moving today? So Nvidia is doing the best on my watch list, and then Netflix isn't doing bad. Apple's fine. Tesla's also fine. Palantir is taking a rare large hit today. So is Coin. So is Avago. Avago's not holding 300. So some of these well-known tech plays are down 2%. So I think some of the people swinging calls from Friday to today are feeling some pain. And I have to admit, I'm feeling kind of lucky. I really, really am, because on Friday, I decided to cut my calls just because with OPEX, there was no follow through and I just didn't want to take the theta hit over the weekend. And obviously seeing how things are opening up today and seeing how they're continuing to persist today, I have to admit, I'm feeling a little bit more lucky than not. Oh, brother. What do we have? What time is it? It is 10:07. So we have the 30-minute Orbo, which technically has not broken down on the SPY or on the Qs. The 15-minute Orbo broke to the upside on the SPY, and it broke to the downside on the Q. So the only major Orbo, the opening range breakdown, basically the high and the low of whatever time frame you care about, the first minute, 5 minutes, 10 minutes, 15, 30, whatever you care about. The 30-minute Orbo has not broken yet. We have not exceeded the high or the low on the SPY or on the Qs for the 30-minute range. On the 15-minute range, we have broken to the upside on the SPY, the downside on the Qs. So that's obviously conflicting data right there. And then obviously we're not even an hour into the day, so you can't break the hour Orbo if you haven't traded for an hour. But the SPY is already hanging back out at its red to green move. It's dragging the Qs up with it. Here's a look at the flow. The Mag 7 is catching a bid. The NASDAQ, a little bit of one, but it literally hit a low right at 10:01. So we're kind of actually seeing that 10 a.m. reversal again. Definitely something that we've been tracking now for a couple of weeks. How it's not guaranteed, obviously, by any means, but we've been noticing it more and more and more of just honestly of how at between 10 and like 10:05, 10:10, seemingly whatever the initial push of the day is, that we end up just like reversing that. So we're kind of seeing that right now. Can I turn this strategy back on? I'm thinking about it. It's on for right now. What time is it? What time? All right. I'm hoping that I did the mental math properly enough that they're not going to conflict with each other today. But we're about to find out. So hold your breath on that one. Hold your breath on that one. Yes. So 5-minute indecisive, but on the bullish side. 10-minute indecisive, but on the bullish side. 30-minute on the bearish side. 40-minute holding bullish. On the NASDAQ, 5-minute neutral, very indecisive. 10-minute almost went back bullish, but got smacked, and now it's clearly on the bearish side. 30-minute clearly bearish, and 4-hour hanging on by the skin of its teeth, and it looks like we have so that's interesting. Before, when we were seeing all these sitting buy orders at 35, these guys right here, I was kind of, that to me that was a weird level. I was like, oh wait, what are they seeing at 35 that like they care so much about? What they care so much about is, look at this support. It's the support from the Friday low, and it's the support from the pre-market low right here, 23,735. This is the exact reason why we are sitting. It's kind of cool to be able to match those up where we have these important technical levels, and then all of a sudden to see trades like literally on the market of why are they identifying. To me, 735 just is, I don't know, it's not like a key psychological level or anything like that, but what they're targeting is this structural level. It is the pre-market low, and it is the Friday low, like literally perfectly to the point. That's what they're playing. Interesting. Interesante, mi amigo. Interessante. Huh. Who would have thunk? Palantir taking a hit. Nvidia popped for the first 5-ish minutes, then just going perfectly flat. Apple actually building up, but recently just given some back. Netflix all over the map. Tesla is actually looking somewhat decent. Microsoft not so hot. Palantir not so hot. Broadcom not so hot. Coin not so hot. A little bit of a bounce back. Bitcoin's getting hit. MicroStrategy not so hot. Rum not like nothing. Even Hood's down 3%. DJT actually trying to recover. Red on the day. SOC still a lower high. Might be breaking this low soon. That's not good for semiconductors. Open is somehow up 22-23%. Is there any news on this? Does anyone know? This one to me seems like another pump and dump. So if you're an active trader, have at it. Obviously, whatever way you play it, I hope you make money. It clearly does have good ranges, but this is, in my humble opinion, it's not something that I'd be the most interested in investing in. Not the most interested in investing in. But it is up 21%. What's that daily chart look like, dude? Bitcoin might not be holding that 50 EMA. If for my crypto traders, you might want to be paying attention to that. Open, getting that breakout. Let's see. Attempt number 1. Remember, if you're going to play against it, just because it's up doesn't mean it's the time to play against it. You want to look for the first red day, breaking the previous day's low, and volume exhaustion. That's the telltale sign that the pump and dump is going from pump to dump. You don't just arbitrarily short it. BMNR, this is the Tom Lee Ethereum Treasury one. Did get a pump with ETH, but now the past 4 days have been red. What's the other one? Kohrs, not looking good. AMC, not looking good. GME, literally doing nothing. What are some of the other ones that we look at? The other like very obvious pump and dump ones that everyone swears is going to be the next great thing, and then it's just not. What was the other biotech one? There was a bio. I thought there was a bio. PHH. That one's already been done. That one's been killed. What was it? There was a few more that we were paying attention to. At least one more. Someone help me with it. I thought there was a biotech. Maybe it wasn't a biotech. Proc, that's it. Whoever said that, you're a freaking genius. Yeah. Like these patterns are always the same. As soon as you see it a couple times, you're like, yep, there's that again. Yeah, good call out on proc. So open, it's getting a second pump. That's very much a thing. I'm just going to wait and wait and wait. Well, I'm not going to trade it anyway, just because I'm not set up to be shorting penny stocks like this. But I'm sure there's some sort of news that's getting it to pump. If you're playing it, obviously I wish you the best of luck, but also understand you are you're playing with fire right now. You are very, very, very much playing with fire if you are deciding, in all reality, to play it in either direction. Dude, are we back into this same bullshit? Very quickly, if you're joining in right now, as we're waiting for this chop fest to actually do something, don't forget to sign up for Public. It's my favorite place to trade options. And if you start trading options, or if you're already an options trader, I recommend you check it out, because as soon as you see your rebates start stacking up, I believe you're going to love it quickly. You're going to love it as quickly as I do. So check it out. No commission fees, no per contract fees on stocks and ETFs. And like I said, every single time you trade an options contract, doesn't matter if you are long or short, doesn't matter if it's a call or a put, you will be earning that. Of course, they have stock trading, they have bond trading, they have crypto trading, they have high yield accounts, they have retirement accounts. They have what you need. Check it out. Pin to the top of chat, and use that link to get a better deal. You'll start out at a better rebate tier. Palantir getting smoked. Nvidia, what time is it? What time is it? What time is it? What time is it? I'm a little bit, how can I code against this in the future? Does anyone, maybe for you guys on Ninja Trader, I think the only way to do it is to put the strategy together in one strategy. Because when you have two independent strategies firing, it's one thing to check if you're in a position, but what if they both try to trade at the bar open, or really on bar close, on the at the same bar? Matt, thoughts on MSOS or other cannabis plays with the recent news? Nope, nothing. I believe it should be passed and whatnot, but unless my question to you is, what is your edge? I mean, if you have a particular insight and knowledge of politics, of what's going to get passed and what's not going to get passed, have at it. But for me, when it comes to if I believe a political event's going to happen or not, I'm not knowledgeable enough to have better than a 50-50 shot. So I guess it comes down to that. When it comes to the market trading, making money as an active trader is difficult enough and is borderline impossible if you don't have an edge. You make money consistently over the long term of exploiting an edge time and time again. And to me, when it comes to these cannabis plays, you have to have some sort of edge. And it seems like the edge in that world is very specific to basically making a proper predictive call out on the world of politics, which is just not for me. Create an enum property which lists your strats on bar. Check if it's had a trade. No, that's not going to work because they're both trying to enter at the exact same time. So neither of them, it would do its check, but they would both turn up as, oh no, you're not in a position, because of the fact that they're both starting to get in at that moment. So that wouldn't work. And even that way, that would be a weird way to do it. Netflix, fucking Netflix. I knew I should have kept that position. Fuck me. I got out of my Netflix. Granted, I did lock in a profit on it, but it would have been a better profit if I waited till right now. But hey, coulda, shoulda, woulda. Coulda, shoulda, woulda. Anyway, the enum doesn't make sense because you already have the ability to check if your account's in a position which is doing that for you. And the fact that it's native means that they probably have a faster check than your own written code for an enum check. Oh, Netflix is looking good. Oh, man, I wish I held on to that. I wish I held on. Yeah, that's looking like Compute Clark. Why in the fuck did I get out of that? Why did I get out of that? All right. Netflix looking legitimately good. That's frustrating. Tesla is trying to chill at this breakout line. Doesn't know what it wants to do or not want to do. Man, we've done nothing today. Microsoft not looking so good. Is it going for this downside gap fill? So Microsoft has a downside gap fill to 515.95. So even though I'm a big supporter of Microsoft, I have like quite a few shares in my long-term investment account. In the short term, it seems like this downside gap fill to 515.95 is a pretty obvious play. Palantir has a downside gap fill to 161.40. Broadcom is right at a recent low. If it doesn't hold 300, I'd be watching 292. That's the next tranche. Coinbase tried to get going with the Bitcoin pop, failed. I was at one point considering this upside gap fill to 376.83, but ever since then it failed. And now at this point, it's almost more of, is it going to return to the scene of the grind down here at 290? What else do we have? Hood chilling sideways. DJT trying to recover. Rum actually getting knocked right now. I'm still waiting to find out if anything's happening with that Northern data deal. I would love for it to happen, but we're just kind of awkwardly waiting on that one. MSCR has an upside gap fill to 383.50, but it just took out recent lows, and now it's at kind of like when I was saying the scene of the crime, this is now like potentially a massive homicide if it does not hold this 360. Yeah, that's, I mean, and it's not going to help by the fact that Bitcoin is potentially breaking down there. Apple just trying to hold this high flag. Nvidia, not an all-time high, but also not far away at all. Meta now has an upside gap fill to 780. And then the start of the downside gap fill is at 745 with the gap fill being 708. So as an upside gap fill and now a downside gap fill. Once again, that is for Meta. Meta. All right, while I'm here, is there any other daily charts you guys want me to look at? Matt, on your position check, you could have a public int defined as at 0 for strats depending on firing. When the open position check, if you are not in a position, add to the int, sleep 1 second, and check. Yeah, you could do an iterative thing with a slight delay. That's the first thing that my mind went to as well. I think that's a pretty astute suggestion. I'm just wondering if there's a better way, like a faster way to do the check. And the only thing I could really come up with is pushing the strategies together in the same strategy. And then even if it's on different time frames, you can just import the other strategy's time frame and then still do all your logic there. I'm just curious if that's faster or that delay tactic is a bit faster. Yeah, I don't know. I'm sure it's somewhere in their documentations, but no. Even though it's boring as all heck, my stuff hasn't fired because the market's gone nowhere. It's trading on the NASDAQ, it's trading on NQ, and in reality, that was enough of a bullish push to kind of negate this bearish sell-off, so the momentum kind of netted to zero, and now the momentum is truly nothing because of how freaking sideways we are going. Oh, man, oh 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 man. Oh man, oh man, oh man, oh man. So now I'm just awkwardly, we're all just awkwardly waiting here. And that's, I don't know. I get it. I'm there with you. These ones are all painful and they're boring as shit. But some days it is appropriate to just do nothing. The SPY has had an expansion pattern, which I hate. We have a high and a low, a higher high and a lower low. So when it's getting higher highs and getting lower lows, I find that to be extraordinarily difficult to trade. The Qs are actually potentially switching because we had lower highs and lower lows. We got into some consolidation and now the consolidation's breaking up. So you could argue that we've gone from lower highs and lower lows to now higher highs and higher lows. We did make a fresh high off of higher lows. So this actually might be going bullish, and in the very short term, you could argue the same thing on the SPY. We popped consolidation. Which way did it break? Breaking to the upside with higher lows as well. So maybe the bulls are like starting to develop a bit of momentum here. The Mag 7 just for to hit a fresh delta high. The NASDAQ is pumping off of the delta low, and now the SPY, same thing. It hit that fresh delta low at 959, and now we're popping. And now we're getting a little bit of a pop. And only one of my strategies is traded. Yeah. Maybe the filters I put in were a little bit too restrictive. But honestly, were they? Because like, I feel like psychologically my knee-jerk reaction is that like, oh, they're too restrictive because we haven't like traded yet today. But looking at these charts, should it have traded? Maybe it could have caught this breakout. Maybe like that's the one thing I'm seeing is on that push. But if anything, it's more conservative to wait for the next pullback and wait for that next higher low and take the trade off of that. So if I were to show you the 1 minute right here of like, okay, cool. This on the screen, these little triangles, it's called fractals, and that's just the local highs and the local lows. So right here, same highs, higher lows, it broke out. So by definition, the fact that you're above these highs means you have to have higher highs and higher lows. That's how it works. But with these higher highs and higher lows, like you could chase that, which is going to be fine. And in an event like this, it already worked out pretty well for you. But you have the secondary option of waiting for the next low to be established and playing off of that. So like you could be like, okay, I'm now in bullish mode on the 1 minute chart. I have higher highs, I have higher lows. That's a bullish trend. That's what you're trying to take advantage of. So you have two options. You could take the long on the creation of that trend of the higher highs and higher lows, or you can wait for that as or maybe I'm doing, I don't know, this shit hasn't traded yet. And then you could say, all right, we're going to wait for a second. And then when you do wait for a second, you say, okay, cool, higher highs, higher lows. And then instead of chasing the breakout, you wait for really the next low to play off of, because then ideally you're playing it very close to that risk point. If you do it, it's a bit more conservative and theoretically you are taking on less risk, but the trade-off there's never such thing as like, oh, this is always optimally better. The risk there is what if on the breakout, it just keeps pumping seemingly like it is right now, and then you just miss the trade. So that's a trade-off. Is if you're going to be a bit more conservative and minimize your risk, you're going to miss some of the trades that would have actually worked out nicely for you. I'm not here to tell you one's better or the other. I think some are appropriate depending on like different personality types and whatnot. But it might end up, do I want to manually trade that dip? The Qs did make that high. Oh, what in the world is fucking going on? I think if this were to go, I cannot believe it's only traded one time today, and we're almost an hour in. So maybe we're going to get a little bit more clarity because we did just get almost like technically we're not an hour in, so we didn't get the 60-minute Orbo, also known as the initial balance. That's for whatever reason they call that a different name. So if you hear the 15-minute Orbo, the 30-minute Orbo, it's all the same as the 60-minute Orbo. But when it comes to the 60-minute Orbo, all the fancy schmancy trader people like to call that the initial bounce, but it's no difference. It's the 60-minute Orbo, the 60-minute high and low. You either wait for the breakout or the breakdown. And as much as like logically it's the same as the others, when you're talking about exclusively the first hour, it's referred to as the initial bounce. I don't know why. I bet you could ask ChatGPT about it. I bet it has something to do with the old days of like pit trading, if I had to guess. But in reality, I don't really give a shit. I think people like to be overly complicated in this world to make themselves feel a little bit better. If I had to ask, if I had to guess, if. Oh, brother, that would have worked. That would have worked. So if I wasn't so restrictive, the new restrictive rules that I put in, it would have traded twice today and both would have hit. So I'd probably be up around 300 per account. But I feel like that's just recency bias. It feels like it's recency bias, because if we were sitting here on Friday, I'd be complaining to all you guys. I'd be like, yeah, no, like, why wasn't I more restrictive? Like, why didn't I put in extra filters to really only trade with the trend? So it cuts both ways so rapidly. It really does. It's always this game of coulda, shoulda, woulda. Always the game with coulda, shoulda, woulda. Speaking of that, the coulda, shoulda, woulda is about to get a little bit fucked up here. Dude, if this comes right back, it was just about to tilt bullish. What the fuck is this, dude? It was just about to tilt bullish. Oh. What the fuck? I really thought. Wait a second. Did I put an end time on that code? I thought one strategy should have just fired, but I might have turned it off at 10 a.m. And now that it's 10:30, let me check out this code. Start time, end time, end time, end time, end time, end time. What the fuck? No, it ends at 3:30. Why the fuck did that not trade? What in tarnation?
Order submitted. Order filled.
Hello? Looks like slippage is still getting us. So the lead account is now at 455, and these other accounts are basically back to break even. I guess I'm just going to turn that off. I'm very unsure why one didn't fire, but the second one fired anyway, so it is what it is. It is what it is. I thought it should have gone on this bar, breaking this low at 10:30 exactly. Pump, pump, pump. You break this low. And then even though this is very extreme, the fact that we took out this low, it should have been going short on the break of the next low, but it was seemingly delayed by a bar. So I need to check into why that happened. I thought it was supposed to go short here at 85, but it looks like it took a delay. And then there was extreme slippage that, hey, whatever, it made me money anyway. But almost back into the green on the day after the first like weird bad beat. But it is what it is. It is what it is, team. I would love to see this all go green. That would make me feel better. It's also uniquely frustrating that the lead account's at 420 and these other accounts, this lead account's at 455, and these ones are still in the red. Not good. Not good. All right, what do we have going on? So we almost made a vomit to the low from Friday. Now, at this point in the day, as of 9:31, almost excuse me, not 931, 1031, almost 1032. We have not taken out the previous high or low. So when I say the previous high or low, I'm legitimately talking about Friday's high or low, which Friday's high is all the way up there, and the low is pretty much at almost where we're at. Oh, wait. So SPX did, but SPY didn't, and QQQ didn't. So SPY, QQQ got really close, and the SPX barely did. Like it kissed it right there at 950. So technically, we did take out the low with respect to SPX. That statement is not true when looking at SPY or when looking at QQQ. Not true. Who would have thunk it? Who would have thunk it? So that's a little interesting, a little bit over exuberant on SPX relative to SPY and QQQ. For those of you who are maybe new or maybe you just haven't been taught this, there is an actual difference between SPX and SPY. So they're still both technically the S&P 500, but the actual S&P 500 is SPX. Like that is the theoretical S&P 500 index. And when I say theoretical, it means it is it in theory. Like it doesn't have to do the buying and the selling. It's always like theoretically perfect. While SPY is an ETF, it's an exchange traded fund created to mimic the S&P 500, which means it's not theoretical. It's real, as in it has to buy all the components in it. So sometimes there's slight time delays, sometimes there's slight transaction fees and things like that, of why they're not like 100% perfectly correlated. But with that being said, they are like 99.9% correlated, just because right now the markets are very fast and transaction fees are very low. But that's why there's exactly what we saw of why did the SPX make a slight fresh low while SPY didn't. That's the reasoning for the difference. One is the theoretical perfect index, SPX, while SPY is an exchange traded fund created to mimic that. Similar thing with like the VOO from Vanguard, VOO, same thing. It is the actual ETF. Do you think Meta has peaked? No idea. And I think that's also like the wrong question. I don't think like predicting like that, like I predict this goes up, I predict this goes down. It's a losing game in active trading. Like the successful traders I've met are never asking themselves those questions. Truly, they're never sitting there guessing of do we go up or go down. Obviously, we're humans. So if you're in a position, you hope it goes up or you hope it goes down. You hope it goes in your favor. But obviously, hope is also not a strategy. But in terms of that question of like, oh, is this a high or is this a low? That's never the question. The successful like traders I know making millions of dollars, that's not what they ask themselves. They ask themselves, whatever certain situation they're in, what are like the odds based on how it's played out historically? And then they say, okay, in this exact setup, when we can find these setups historically, it's favored the bulls to this % of the time, the bears this % of the time. And then from there, they say, okay, like this is how I want to take advantage of it. But it's always a game of like the distribution of probabilities. Like in this setup, based on X, Y, and Z, there's whatever, a 65% chance that the bulls push it all the way to up here. And that's a 35% that the bears push it down to here. And they're like, okay, cool. I like those odds. I'll take the odds. It's never just guessing like, is that the high or the low? It's always based on generally quite a bit of historic examples of being in that like position. So just like, is the high in, is the low in? I mean, I understand why people ask the question. Like I totally get why people want to know the answer to that, but you should also understand that like that question and thus the answer to the question is not going to help make you money because it's not something that can be properly modeled or predicted. You can always guess and maybe it is and maybe it isn't. But once again, that's just guessing then. It's just purely guessing. Matt, tell us what the fuck is going on with rum. You know, Pavlovsky, the last capitulation to a massive run or the same. The fact that I interview the CEO doesn't give me any particular insight into how people are choosing to trade the stock. Those two things are like, I think that should be pretty obvious in your mind that those are two very distinct things. How would I? People who run the company, the board and the CEO and stuff, that's what they do. They don't get to say over who gets to buy and sell their stock. That's what the open market is for. Those two things, I mean, you have to know that's a stupid question, right? So you're saying because I've interviewed the CEO, I know what market participants are, why they're choosing to buy or sell at whatever levels? You have to know that those are two completely independent things. That makes no sense. I'm more so curious about the logical leaps you made of like, what is the connection there? No, just tell us why it is flat for so long. Because people are choosing to buy and sell at the same price. Duh. When stocks go up, people are choosing to buy and sell at a higher price. When stocks go down, people are choosing to buy and sell, transact at a lower price. When stocks go sideways, people are choosing to buy and sell at the same price. That's literally how just markets work, man. That's just an aspect of markets. Literally, just that's how markets work. Now, if you're curious to why people are choosing to buy and sell at a higher value, lower value, or sideways value, well, then I guess go interview every single person in the world who's traded that equity or whatever the underlying is in the time frame you care about, and interview them about why they decided to do what they decided to do. You have to understand that there's so many people engaging in the market at one time, and what one person might be looking at for a scalp trade of why they decided to buy or sell could be completely different than an insurance fund who is like, or a pension fund who is buying this for a multi-year investment versus maybe a market maker who is just providing liquidity. Like, literally, you'd have to go interview every single person who transacted and ask them why they did what they did. And obviously, I'm saying that a bit facetiously because it's impossible. And also, even knowing why someone does what they do, does it matter? All that matters is, can you identify the trend and can you take advantage of said trend? Can you identify the current condition you're in and take advantage of said current condition? Like, it's just that time and time and time again. But this idea of like, well, why is it doing that? Like, I don't know, go ask other people why they're buying, why they're selling, and why they're doing what they're doing. Has something put in a high and the low? I don't know. I'll tell you afterwards. Like, I'll tell you when the markets closed that day and how things actually played out. It's more of, I think a lot of retail is stuck in this game of asking themselves questions that you're never going to get the answer to. So just don't waste your time doing it. And I've been there too. Like, I've asked myself those questions. And of course you ask it because it's more of like a moment of like emotional stress when your money's on the line and maybe things aren't going well for you. So like, you wish you knew the answer to it, but in reality, you're not going to get the answer. So I would say focus your energy on the things that you can answer, such as what is the price trend? What is the price momentum? What is the options flow? What is the chatter? Is it bullish? Is it bearish? What are the key levels of support and resistance? Where are the major open interest levels? Are you in positive or negative gamma? What's the current Vanna and charm effects? Those are all things that are measurable. They're all empirical, and they could all like come into play as you're making your decision. Even something such as seasonality. Those are all things, data points that you're saying, okay, like, this is how the puzzle is currently looking. And like, you could base a decision off of that. But something like, is this the high or is this the low? I get it. I get why people ask it. And like I said, I've been there too. But it's silly. It's useless because you just don't know. Can you beat this dead horse for another hour? I'm going to try. I'm going to beat it so hard it's going to come back into life. Life is not linear. It's not like alive and dead. It's circular. That like, maybe if you're dead enough, you could become alive again. Same thing of like, if you're alive enough, you might become dead. It's very much a circular thing rather than a linear thing. But obviously someone gave up here at 1028. The NASDAQ puked. The Mag 7 really puked. Holy shit. What was that? Was it Tesla? No. Nvidia? Kind of a little. Palantir's been getting hit all day. Microsoft, someone dumped Microsoft at 1028. Apple got dumped at 1016. Netflix is actually giving some back now, but it was looking good. MSTR, actually people are fighting back on MSTR. Meta, it was weak. People are fighting back there. Avago, people were dumped it, and it's just been flat since. AMD getting destroyed and Robinhood was getting destroyed. A little bit of a fight back right now, but it looks like the major culprit is Microsoft because someone dumped quite a bit of size right before the turn of the hour. Right before the turn of the hour. But this has to be one of the most fucking lethargic openings we have seen in many moon. Many moon. Open's giving some of it back. What else do we have? Open, Tesla, Palantir. Ooh, things are looking ugly today, folks. How's Bitcoin? 115. Just a fucking sideways chop fest. Well, if you sold premium, congrats to you, because the fact that we've gone nowhere means the premium sellers have won the game. Premium sellers have definitely won the game. Okay. If I coded my strategy properly, which is a giant fucking if, I think it should go short if we take out 59. I think if we push below 59, it should take another short position. We are below VWAP. We are below the point of control. There's sitting liquidity down here at the bottom at 23,735, which, surprise, surprise, happens to align perfectly with the pre-market low and the low from Friday. A lot of sitting buy orders attempting to either buy the bounce, or they could be people who already have a short position and they're attempting to lock in their gains exactly at that level. So it's in reality probably more of the shorts locking in profits, but also it's not going to be exclusively one. Like, it's going to be some sort of mixture. I would just say a majority of them are most likely shorts locking in profits at the pre-market low, which is perfectly in line with the low on Friday. And we're going to see. So we are in the red there. We were checking out Meta. I mean, look at this. We've fucking done nothing, man. NVIDIA is starting to lose its traction. Had a really nice pop out of the gate. Sideways. And now we're giving some of it up. Sideways. Mag 7 is at a fresh delta low on the all expiration. That's not so good. The SPY is going sideways. And the NASDAQ did pop, gave it back, but not currently at an extreme. Oh, are we missing any big news or anything?
Order submitted.
Did it take that trade? All right. Just slippage of 6 points. Right? I said it was going to go short at 59, and I got to fill at 53.
Order filled.
I guess it doesn't matter because I made money, but definitely some slippage. That was a 6-point slippage. Oh, I want to speed these things up. All right. I'm a little bummed out. Lead accounts up 500. Follower accounts are only up 100. Well, some are up 180. Slippage is the one who screwed me over today. Why did it not short right at that breakdown? Why, oh, why, Batman? Why, oh, why? Should Matt not learn to code? Hey, you're saying like undo it. Like just forget all of it from my memory. Oh, brother. Well, I'm going to let it run today just to see how things go. But on stream, let me do the math. Oh, we have 15 minutes left. There's a chance that it trades one more time before I conclude today's episode. All right, I just want to make sure we're not like missing any breaking news or something like that. Financial juice right here. No, I'm not. Trump on Russia, Ukraine. I know exactly what I'm doing. True Social. Sick. The U.S. makes China-related changes to the sanctions list. The U.K. weighs replacing stamp duty with a new property tax. Putin held a phone call with India's PM Modi. I think that's the official low, folks. I think it is. Yeah. So the Qs took out the low, and the SPY is about to. Oh, golly. What is today? Today is the 18th, I believe, all day. I believe it is. Okay. All right. If you are in the Discord, Piper just fired. So that's in there. If you're in the Discord, if you want to take it, take it. I would more so beg of you to understand the momentum aspect of it, or you could put your own interesting twist on it, I suppose. But I don't know. Arbitrarily copying in the world of trading, I have found, can become uniquely difficult and shitty. What is today? Today's the... It is the 18th? I'm trying to figure out if I want to sell premium into this hyper positive gamma environment. You know what I should do? Yeah, the big guys just started selling here. Let me zoom in so you can see this a little bit better. Right there. They did nothing all day, and then just recently the big guys started to become baby slight net sellers. Baby slight net sellers. All right, let's see what I could do here. All right. Why is this screenshot not working? If you're in the Discord, I'm trying to take a screenshot of the position I just made. I'm doing a little bit of premium selling myself today. A little bit of fun, perhaps. Well, it'll be fun if I make the money. It'll be uniquely not fun if I do not. That's how trading goes. Baby sellers, yeah, they're selling babies. Like you guys haven't heard about that? The prolific markets to sell babies in? All right, if you're in the Discord, I just put that in there. D Wolf, my call credit spread's locked in already. Well, that's because you're the fucking man, dude. No one's surprised that you've already made your money and you're doing stuff with your life. No one's surprised in the slightest. A little bit of a rebound right off that low. Remember that when you take out the previous trading session's low, where's the close? Oh, why is the close not marked here? Huh? That's not good. Wait, wasn't it? Did I delete the close value? I have it written down of what it should be. Again, let me put this back in there. Just it's a little bit better for illustrative purposes. We closed at 577.34. 3434. All right. So right here at 10:45, you guys who are watching the show rather than just listening to it can see that we took out the low from Friday from the last trading session. So right here, we took out the low, we took out the low. When that happens, that means that there is about a 75% chance, I think technically a 77% chance, that you close the day below the previous close. So when you take out the low, so you're in that condition. If we take out the low, then it's an if-then statement. If we take out the low, the previous trading session's low, then there's X percent in this chance, 77% chance, maybe 78. It's somewhere between 75 and 78 that we close the day somewhere below the previous close. It might be to a cent. It might be to $500 for all I know. But that's the statement. If you take out the low, then you have X percent chance, somewhere between 75 and 78% chance of closing the day below the previous close. And the opposite is also true for when you break the high. If you break the previous day's high, you have roughly the same percentage chance of closing above that high. Now, that doesn't mean when you break the low, you should just go short or buy puts, because that's not the statement. The statement isn't that we keep selling off. It's just that we close below this value. So it could rebound all the way back up and we close right there, or it might keep selling. But that stat I find to be more useful in terms of like a premium selling strategy, or it could also be a reversion strategy if you bounce back above the previous close. So in this event, the fact that we took out that low, right as soon as it happens, you could use it to sell premium if you so choose, especially if you like have proper risk to reward. But the other thing you could do is if it bounces up above the close value, because we know statistically it's likely to close below it, you could wait for that structure to start to break down, and then you could use that as more of a linear trade, like a linear short opportunity. So from the time that I've known those stats, that's like the two ways that I look at it. Is on the event it happens, you could use it to sell premium, and then in a certain subset of examples, if there's a big enough of a bounce, you can wait for that bounce to attempt to fail. Like using today as an example, of course, the opposite would also be true if you break out of the high and fade it back. So that's another way you could look at it. Oh, and actually we hit that and then buyer stepped in right away. The question is it going to hold? The Mag 7, what the fuck? That looks ugly. I see that price is bouncing, but the Mag 7, they're not buying it in the options market. The NASDAQ is getting a little bit of a bounce. The SPY is getting a little bit of a bounce, but I do find it concerning that in this bounce, the delta on the Mag 7 is still just getting smoked. So be careful about that mismatch. Let me zoom in here just so we can. Yeah, you have some gamma up here at 6460, and then quite a bit of gamma between 70 and 85. Some negative gamma at 65. That's quite the bounce. Maybe a little bit of a fake out. Bouncing off of 440. Yeah, surprise, surprise. We are just pinned to this 50 level. Oh. This is one of those, I guess, trading discipline, trading psychology things where I'm sitting here and I'm frustrated that it hasn't traded more and I haven't made like more money. But in reality, I should be happy because it means that my robot wasn't trading in a fucking chop mess, which is like what you're supposed to do. And I guess that's a really good example, or I suppose a really good reminder of the fact that there's going to be times like this. There's going to be events like this where we all feel that like urge, like we all want that dopamine hit of like making a trade and making money, but not all days are built the same. And today's been a shitty fucking chop fest. And I don't know if there's been much of an opportunity for a quality trade. So we'll have to see, but it's just nothing. You know, if I could wave a magic wand and make today fun and make there be a lot of opportunity, I would do it for you folks. That's the kind of guy I am, but unfortunately, I don't have those powers or capabilities at this moment in time. But even look at this. Look at the hour chart. Just it's expansive. Like that's a tough thing to trade. We're just going up, and then we're just going down. Like it's just a pain in the ass, dude. Just higher highs, lower lows. This one, that's a classic expansion. And then you're probably going to see that on SPX as well. Well, maybe on ES. Yeah, same thing. Higher highs. Hasn't made that lower low. You might, if you're trading ES, your key pivot here would be 6456. But NQ definitely has higher highs and lower lows. So it's just, Might be a bust of a day, which is unfortunate because I actually kind of consider Friday to be a bust of a day as well. So sometimes you have these periods of where you're getting lulled to sleep almost by how boring the market is. But those are some of the most dangerous periods because you get so bored. And then at least for me, sometimes you start making trades out of boredom. And that's where you can get like into real trouble, is like just making stupid trades that you have no business making. And I think that's one of the biggest battles in moments like this, is just to literally do nothing, just to wait and wait and wait. Momentum wise, 5 minute on the ES, on the S&P 500 trying to hold bullish, 10 minute trying to push. Look at all those wicks though at 70. Wick, overextension wick, and then got smacked. Like, this is just so obviously range bound. 30 minutes still bearish, 4 hours still bullish. On the NQ, 5 minutes trying to push bullish, 10 minutes trying to push bullish, 30 minutes still bearish, 4 hour almost puked bearish, and then just had no follow through, and it got bought right back up. All right, I'm going to mark out some of these highs and lows. ES has far less of a range. Indecisive. Oh, dude, look at that weird ass stair stepping. Step. I don't know if I've ever seen this before. I don't know if I've ever seen that before. Bitcoin catching a little bit of a bid. That's a good question. How is my blood pressure? Well, we'll see it today. I assume, apparently I don't sleep well because my recovery is dog shit. I'm in the red on recovery, so that can't be good. Which probably explains why I always have bag under my eyes and I always look like shit. Is because apparently I do, even though I sleep well, like my sleep and sleep efficiency is really good. I think it's something about my respiratory rate. Something about that. I don't quite know why. But what's my heart rate is in the high 60s right now. I think that's pretty calm for like an active person just standing up. I think it'd be a bit lower if I were sitting down, I would assume. But yeah, no. My biological like markers, my biofeedback right now is pretty constant, probably because I'm getting bored to shit. Probably a boredom heart rate reading. Yeah, my stress levels, it actually literally is coming in. It literally says low. Yeah, stress levels haven't been doing anything. Actually, my stress levels were higher at 4 in the morning when I was sleeping than right now. I guess I was having a nightmare or some shit. I don't know why. Also, why were my stress levels high? Oh, is it because I was drinking so many margs last night at 8 p.m.? Huh. The more you know. The more you know. Would have anything to do with Piper trying to smother you with a pillow? It might be that. Does getting asphyxiated with a pillow strike your stress? Spike it? Because it could be. Could be. Well, folks, that's kind of all she wrote. That's kind of all she wrote. Not really the most going on. I'm a little bummed because my accounts are all over the place, and basically they should all be up about $350 right now if everything went according to plan, as in we lived in a perfect world with no slippage, but we live in a world with quite a bit of slippage. So instead, some accounts are up 500 while most accounts are up only 100, and it just is what it is. And I'm going to have to take it with a grain of salt because today is nothing but a chop fest. And I don't know, I guess I'm more in the mode of account survival and waiting for a good day just because nothing is going on right now. And obviously, I'm not your mom. You should do exactly what you want. But my big advice on the day, my big tip on the day would be like, no, do everything in your power to be disciplined enough to do nothing unless you see that perfect setup. That's what I would say. So hey, if you want to be a degen and push it across the line and maybe you get lucky and maybe you start to trade right before a trend happens, yeah, I hope you're on the right side of the trend. But for now, I would say based on all the metrics that I'm seeing, there's a whole bunch of fucking nothing going on. So I suppose it is what it is, and just live to fight another day. That's what I have for you. Don't forget to sign up for Public. You can download and sign up for free. Check out the platform, see if you like it. But I think as soon as you start to see those rebates stack up and up and up, you're going to like it as much as I do. So shout out to Public. That's what I have for you guys. Of course, if you want to hang out even more, that's exactly what the Discord is for. That's where I post my trades. We have more discussion. We're actually about to start fantasy football. The first month is 100% free when you sign up if you use that code Goonie. We're going to be posting an update video later on today. Hopefully something happens and it makes it worthwhile to post an update video, but that's currently the plan. And then we'll be streaming once again tomorrow morning at 9 a.m. bright and early. That's what I have for you. I appreciate all the good vibes. I hope you've made a fuckload of money and make a second fuckload later on in the day. That's what I have for you guys. Thank you. Peace.